Hi everyone, it's Alex here at Cestrian Capital Research. A disclaimer, this webinar is intended for US recipients only, and in particular is not directed at nor intended to be relied upon by any UK recipients. Any information or analysis in the webinar is not an offer to sell, or the solicitation of an offer to buy any securities. Nothing in the webinar is intended to be investment advice, and nor should it be relied upon to make investment decisions. Cestrian Capital Research, its employees, agents, or affiliates, including the presenter of this webinar or related persons, may have a position in any stocks, securities, or financial instruments referenced in the webinar. Any opinions, analyses, or probabilities expressed in the webinar are those of the presenter as of the webinar's date of transmission and are subject to change without notice. Companies referenced in the webinar or their employees or affiliates may be customers of Cestrian Capital Research. Cestrian Capital Research values both its independence and transparency and does not believe this presents a material potential conflict of interest or impacts the content of its research or publications. Okay, one thing I want to look at is crypto. Okay, so we have Bitcoin here. Let's zoom out. This matters, by the way, if you don't trade Bitcoin, because this is a measure of pure risk asset. So if Bitcoin is moving up, so too are most other risk assets. If Bitcoin is weak and selling off, it tells you something about other risk asset structures as well. So this is our longer term chart. And again, this is based on nothing other than standard technical pattern recognition. Let's look at the volume as well. Okay, so this is your COVID lows. As you can see, Bitcoin trades really well to institutional patterns. 2021 high, just under 69,000. A sell down just below the 78.6 retrace down here. And then a move up. Peaks just over the 1.618 extension, sells down, wave 4 low here, just quite see here, but around the 38.2 retrace, something like that, and then has found a low and is starting to move up. And if this pattern holds, then we should see Bitcoin peak out somewhere between 140,000, maybe 175,000, something like that. Now, personally, I'm going to assume it won't quite hit these levels. And I personally would be planning to sell out as this. If we get this continued wave 5 up, I don't plan to stick around and find out what happens up here. I'll probably be gone as we approach the bottom of this fifth wave box. If we zoom in a bit, okay, so we can see that again, there's your wave 4 low, 38.2 retrace. There is a lot of volume here below around 71,000. So if we get any further weakness in Bitcoin, I would expect that 71K to be defended, and there's still more volumes. You get down below 68,000. So you've got some fundamental protection here, I think, and I believe that we will see, again, liquidity coming in to the market, and I believe that will benefit Bitcoin and crypto more than most. There is definitely, I think, some, how shall I put this, shaking out going on in Bitcoin right now, in all crypto. So you're seeing very violent price moves, which if you just own IBIT or ETHA, any of the standard ETFs, and you don't own them on a ton of leverage, then they're annoying levels of volatility, but that's all they are. If, however, you own the native coins and you are levered 10, 50, 100x, as some people seem to be, then long and short positions alike keep getting blown up. Now, we can all speculate as to why that is. But what it looks like is an attempt to try and shake out tourists, basically, so that the grown-ups in the room can buy more of it. Now, is that true of Bitcoin? I'm not sure. I think it's true of Ether because of this gas fee point for tokenized assets. Bitcoin has less fundamental utility. On the other hand, you have just seen it opened up to Vanguard and one or two other pretty cautious money managers who are now allowing their customers to hold crypto ETFs in their accounts, which has not been the case until recently. So there's a little bit of clearing the decks, I think, of getting as many over-levered traders out as possible to enjoy. I don't know whether it's a final run-up before the market turns bear or whether this thing all goes to the moon. I don't know. But I can't see any other reason why there is such a huge amount of volatility in crypto when it's fairly well understood, I think, that liquidity is coming. I think it's just there to break highly levered native coin traders, I think. Okay, let's do Ether. Now, Ether is looking stronger than Bitcoin. And so if you watch these coins over the weekend when equities are not trading, the first one to react after this recent crypto sell-off was Solana, which is probably the weakest of the three that we cover. Ether has then picked up the baton and is starting to put in a much more bullish look. So as of now, Ether is up and over the 8-day and over the 21-day here. This is today, and next stop the 50-day. So I think the Ether bottomed here. 1st of November, we got a sell-off here. You see like big price swings, which I think is there to try and wreck highly levered holders. But the angle upwards from that November low is pretty steep. So again, over the 8-day, over the 21-day now, and I think that we're in a wave 3 in Ether in this larger degree. So I think if you look at the April lows, I think this is a wave 1. I think that's a wave 2. Holds really nicely at the 61.8 retrace, and I think we're in a wave 3 up, which the minimum it should get to is just around 5,000. It might stop at 61.50, but honestly, I know this sounds preposterous at the moment, but more likely somewhere in the 8,000s, to be honest. I know that sounds ridiculous now, but bull market projections always do when you're at these lows. But all this would be a standard wave 3 extension. So I wouldn't bank on that happening. But can Ether reclaim 5,000? I think it can. Can it push to 61.50? I think it can. And let's see if it goes beyond that. Again, you have to remember with Ether, there's a different thing going on here, which is institutions need to own it, either directly or via treasury companies, in order to pay transaction fees for using the Ether, the Ethereum database blockchain for tokenized assets. And tokenized assets are going to become more and more and more of a thing. We'll start covering them soon, not this year, probably next year. They're going to become more and more of a thing. So Ether will continue to be in demand for longer than Bitcoin, I think. That market up. US equity index ETFs and tech stocks, easy. If things get more difficult and those things start to sell off, yes, you can be short indices, but that's not without risk. A bear market is more volatile than a bull market, and counter trend bear market rallies are brutal. And if you're heavily short into those, then that can hurt. So we also want to find bull markets in different sectors or different countries that can be ridden, even if we hit problems in the primary US equity markets. Okay, that's pretty much it for today. Thanks, everyone.